You're looking at a daily chart of the Nasdaq, which is in an uptrend. How do I know that? Well, on January 1st is like flipping a switch. The calendar changed, and so did the Nasdaq. It's just gone straight up here, right? Well, that's an uptrend, right? You can even do it this way, where it had this rally, pulled back 50% retracement, and then this is the uptrend, right? Well, true. I mean, even a second grader can figure that out. But the longer term uptrend is this black line, the 200 simple moving average, and that for the entire year of 2022, the index traded below that line, and you can see it's downtrending, and this is a longer term trend, and now it's starting to tick higher. And you can see the shorter term trend moving averages are really ramping higher, and definitely in need of a little bit of a pullback, but it's going to pull back when it wants to, not when I want it to. So we're just going to take things one day at a time. I was listening to Charles Harris, and he was talking about the Charles and Mike Day, or the Mike and Charles Day, whoever you want to listen to. But we got bullish the same day. I don't know if I arrived at it maybe a little differently than them, but it traded above the old high. So it was making new highs. It was making higher lows, but on this day it made a higher high. And so that's when we stepped on the gas. That was May 10th, right there. That day, the volume was not, overwhelming, but it definitely was up, more than 1%. And that was when we stepped on the gas at mcstockcharts.com. Been super aggressive, and it's been about 6 weeks since then that the market's been ramping. And like I say, I could definitely use a pullback here, and some of the charts are looking a little extended. But anyway, I'm going to get to that. I was just listening to Charles, and it was interesting that we arrived at the same thing on the same day, and have been way more aggressive ever since. So anyway, and you can see Mike Webster on IBD Live June 30th. I'm looking forward to Mike's stories. He's a great storyteller. Anyway, I want to look at some leading stocks. These are just stocks that I either own or I want to own, or stocks that I'm interested in. That's what I'm just going to do today. No specific theme, just stocks that I like. And this is Super Micro, which we got in about $90. I had it last summer about 50, but I sold it when it sliced the 50 simple moving average. And if you look at the weekly, I mean, this is what this thing does, right? If you look at the pullbacks here, so you got to kind of get used to it. It's really annoying, but these sharp pullbacks along the way, this is what it does, folks. And now it made this high here, and it's starting to pull back. So you can expect something like that, maybe back to 215 or whatever. But let's go back to the daily chart. And you can see that it had this big ramp here from the 119, the breakout. I think that was earnings. And then this, I believe, was the NVDA earnings report. Yeah. So everybody piggybacked on NVIDIA. So it's got this, let's go to the line here. It's got this pole type thing and making this flag type of pattern. And I would expect this to, go sideways here. I hope it goes sideways here around that 230 area, 220, 230. But it's going to do what it wants to do, and that is a potential for a high type flag, which is really rare. And I have another stock that has one that is actually flagged, but I'm going to get to that in a minute. But I like the the large liquid leaders. I'm going to own a semiconductor stock. I want to own NVIDIA because it's clearly the leader. It's been outperforming all of the other semiconductor stocks. And so how do you get in, right? Well, if you didn't get in, I got it here. Bought NVIDIA March 25th around 267. But if you didn't get in, this is it's a weekly review. So I'm going to stretch out a little bit today and go to the weekly charts. And this is a 3 weeks tight pattern, which it had back here. This back in February, it made a 3 weeks tight pattern. What happened? Ramps higher. And then the last 3 weeks, it made a 3 weeks tight pattern right in here. And what did it do? It ramped higher. And that also coincided with the pullback to the 10 EMA. So you didn't know. I didn't know it was going to get support, back at the 10 EMA. Heck, it could have gone down to the 21 or even the 50. We didn't know. So you always got to wait for the bounce, and a bounce with a little bit of volume. And that's what happened last week. This was on our, I posted this chart so many times. People think I'm sick of it. But 390 was the buy point there, and it went up, $40. which was a nice little gain, you know, more than 10% ramp there for NVIDIA. But anyway, you may, you know, now, I mean, you just got to wait. It's a little extended and maybe pull back. These things are not going to give you, they're not going to, a stock like NVIDIA is not going to sit there and form a base and allow you just to get in with an easy entry. It's going to make it hard for you. That's what leading stocks do. Okay, the next stock I want to look at is Tesla, another one we had on our ready list here at 20. I wanted to buy it below 200 or when it cracked, you know, right around here, but I waited till it got above the 200 at 207, and which was the standard buy point, and it ramped like, I don't know, 13 straight days, and then pulled back a couple days last week, and then on Friday was up. But still, if you got it at 207, congrats, you're up, you know, a nice percentage. But it's just this base right here, this consolidation here in a stage one base and a breakout. So I think Tesla, you know, has a lot of upside here, potential upside. We'll just take it one day at a time. I did mention the high tide flags, and I better get that out of the way. This is the biotech stock, ImmunoGen. It's cancer drug. They had positive data and made this poll. It was up 144%, I believe, in a day. Yeah, what day was that? May 3rd, 135%, not bad. And then flattened out, made a flag pattern, and then got more positive news on a phase 3 trial. There it is, 144% on the week. And then made this little flag pattern. There's a short stroke in there as well, as you can see. Little pullback, and then went higher. Wow. That's a powerful move, powerful stock. And yeah, I think it has more potential upside. I always think that, right? I'm a perma bull. Every stock's going higher, but there's the monthly chart. And as long as they keep executing, ImmunoGen is definitely a stock to watch, you know, and maybe on a pullback or something. Another stock that we had on our ready list was Palo Alto Networks. This one is obvious consolidation pattern. Talk about this one every week, practically every day. It joined the S&P 500, which is kind of a random event, but, you know, coincided with the breakout of a base, you know, so that's what happens. The chart's ahead of the news sometimes, right? Most times. I'm not going to say all the time, because we're not we don't deal with absolutes in the stock market. Nothing works all the time, but this is a nice consolidation. This is chart porn right here, and breaking out of a base, just a beautiful. And then on Friday was the inclusion into the S&P 500. So I said at the time the buy point was 207. You could expect a 20% move, and it's up to 250, which you know, that area. So yeah, I'd be taking some profits probably. I said I wasn't going to do themes, but I'm in the cybersecurity theme here, and I love this chart setup. A weekly chart. This will be on our ready list again. This is right here, ready to break out of, I don't know, about 18 months of consolidation, right? So yeah, I like this type of pattern. Probably a little shakeout if I go to the daily. You know, I'm probably going to get a little shakeout down to the 21 or something, maybe even the 50 to shake some of the weak hands out before it breaks out there. But Fortinet looks good. Looks like it's just a little bit behind Palo Alto Networks. If I go back to the weekly chart, in that high, people are asking, what's the high here? So yeah, 74.35. So it's right there. And definitely a quality company, quality stock. Another one that was on our ready list that I did not buy, but some people told me they did, and I had this earlier on an early entry, this break above the downtrend line. But sometimes you sleep, you know, you don't pull the trigger like, oh, I saw that, but I didn't act on it. But that's just human nature, you know. And then you say, oh, I missed that one. But, you know, that's just part of trading stocks. Oh, well, you know, congrats to the longs. Quite a few of you said you got in this one and are holding it. So, you know, that's a hell of a move right there. I believe that's an earnings breakout too, you know, a gap up 31% on 614% above average daily volume. That is not to be ignored, Dan. The next one I want to look at is NVO. I said I like these larger liquid names, and this is definitely a larger drug stock, and it's got a problem with supply, not demand. They got so much demand that they want to kind of hoard the supply for people who are already on their weight loss and diabetes programs. So they need more supply, and I'm sure they'll get it. But they're gonna report earnings here what August 10th, and I'm sure they're going to be pretty strong. They're selling as much as they can make, but it's got this double bottom pattern, 158, then it went up, then it traded down to this 154, and now it's trading higher, making higher lows. So it's definitely one to watch, and I would definitely want to try to get in early on this one. It's just, if you look at the monthly, this thing's just a thing of beauty. Talk about chart porn. This is a retirement account stock, just set it and forget it. This is really a powerful company with a good pipeline too. Anyway, get off the drugs, kid. This is ELF. ELF, I got to look at the weekly chart because this drives people crazy. You can see, that it formed this little consolidation period here, but it's doing what we call like the stair stepper, right? Because it ramps up and then it goes sideways, right? Then it ramps up, then it goes sideways, and it ramps up and goes sideways, and this drives some people crazy. And right now it had this 3 weeks tight pattern, and it's just struggling with this 100, that 100 psychological par level, and it bounced off its 21 EMA last week. But retail's been kind of tough because the recession's coming and the U.S. consumer is slowing. So there's been a lot of retail stocks that have been hammered. But Elf Beauty has bucked the trend and doing pretty well. Another one I want to look at, I'm going to go back to the biotechs. I want to talk about this one. This is TGTX, and I got to look at the weekly. This is a weekly review. And you can see these sharp pullbacks. This is what this thing does, right? These sharp pullbacks for 8, 10, 6, 12, whatever weeks, whatever it wants. But it has these pullbacks. That's its character. That's in its nature. It also has these, straight up massive, moves higher too. Okay, so that's just the way this thing moves. You got the tiger by the tail here, and if this is not for everybody, but I said I like these big, large liquid leaders. I also like to take chances. I like to speculate, take some chances, swing for the fences, and every now and then you hit a grand slam. You strike out a lot too. It's the outhouse or the penthouse with these things. But I thought this would get support at the 10. Nope. Thought it would get support at the 21. Nope. Thought it would get support at the 50. Nope. This thing's going to do what it wants to do. But at some point, it'll turn around. It was closing, when it was on his upswing, it was closing near the highs, closing daily range in the 70s, 72 there, 72, a couple days in a row. When it was ramping higher, 79, closing daily range 95. You get the point, right? It was closing near its daily highs. Now it's closing near its lows. So it was opening lower and closing higher, and now it's opening higher and closing lower. And you can see on Friday the closing range is 7%. So it's opening higher and closing lower, which is, the shorts got control of this thing. But at some point, I expect this thing to turn around when the company announces sales or their European plans for how they're going to go about it in Europe. So just that stock moves on news. So I don't know. It's not for everybody. Dexcom, this is one that I was saying it has a look, and people were giving me a hard time, like it's going nowhere. But what it did is it shook everybody out. This is on our ready list. And this day right here traded down to 117. Everybody's going, this thing's a dog. But all it did was come back to its 50 and then ramped higher. Everybody's a darn day trader right now. You got to show some patience. This is a type of stock that's not, it's not really volatile like a TGTX, but it moved higher. I mean, it's moving out of this consolidation period here, and it's moving higher, and it has up, nearly 5% last week. So we'll take that. Dexcom still a stock that, you say, is it actionable? Well, yeah, I'd say it's still actionable, but it's getting away from its base. It's pushing away from its base. And you could see the trade below the 50, did the Debo, ran higher, pulled back to the 50, shook everybody out and ran higher. So if you own it, congrats. If you don't, I think it's giving you an opportunity still, but it's getting late in the game. Software, I do like some software stocks. I like DigitalOcean, although I don't think I'm going to cover that today. Maybe I will. This is Monday. This has got a long consolidation period. Broke above a downtrend line, ran higher. Now it's just kind of going sideways. Traded down to the 21 Thursday, was it? And then the OPEX Friday was down, closed near the lows. But I think this thing's probably the train's going to leave the station here pretty soon. There you can see the stage 1 base and just the 3 weeks of sideways action. That's almost like a 3 weeks tight pattern. I did mention DigitalOcean, so I got to cover it. This is also one of those, software stocks that sold off with all the software names. Just like a water slide, right? At the water park, consolidated, stopped going down, made this stage 1 base and broke out of it. We had it as it broke above its downtrend line. I want to say about 34, something like that. Yeah, 34. Where was that, Marty? Right around in here where it broke out, and has this cut pattern, and then on Friday just pulled back to the 10. On those OPEX days, it's crazy things happen. So I don't read too much into those. When the monthly options expire. But anyway, DigitalOcean is one that I own, one that I like, and it's got sales and earnings growth. It's not one of these just trading on hope and faith. Okay, I'm going to go to Celsius next, because this is a product that I use and I like, and you can see the base on base pattern had this nice consolidation, broke out, believe that's an earnings breakout, but then it pulled back to its buy point and gave you a second opportunity. Yeah, that was up 19% on more than 575% above average daily volume. So that is not to be ignored, Dan. And it came back to its 21, which was the 122 right there, one buy point, standard buy point. And now it's just trending with its moving averages. And people were giving me a hard time last week, like, this stock's going nowhere. Hey, it was up nearly 4% last week. Like I say, people are they get really impatient. You're like, the demand their stocks go up every day. Your stock's not going to go up every day or every week. And I don't try to win the day or win the week or even win the month. I just want to hold stocks for longer term and get big gains out of them. That's too much pressure for me to try to win every day or every week. I'm too old for that. This is COCO. This one's actually outperforming Celsius. Celsius is very popular on Twitter, but this one is just quietly moving higher and making all these new highs, new high after new high after new high. And that's why I like to look at the new high list when they make their first new high, and it just keeps making highs and new high. Whoops, pull back. And this is where I got in with when it pulled back to the because I'd been watching it for a long time and I didn't think it was going to base, but it pulled back to its 50 after earnings. And what does it do? Makes a new high, makes a new high, makes a new high, just keeps making new highs. So that's why you got to watch the new high list. Anyway, this is MDB. This one, I'm going to go to the weekly here because this is a 3 weeks tight pattern. You can see the breakout on earnings, and it's just trading sideways. And you say, what's 3 weeks tight? Well, institutions don't buy all at once. This is a nice gap higher, but when they do buy, they move the stock. And this one was up 28% on more than 400% above average daily volumes, is forming this shelf here. So institutions do not buy all at once. But this is telling you that they're not selling, right? They're comfortable with that price at 375, right? When the institutions come back in, they'll probably be paying 380 or 390 or 400 for it. But this is 3 weeks tight, definitely one not to be ignored, Dan. And my last one today is that's it. No, I lied. I'm going to do fix because this is one that was on our ready list. It's just HVAC. Usually you don't do heating and ventilation companies, air conditioners, but this one was set up in a nice base here. You could say this was a double bottom. I mean, with chart patterns, you can pretty much, draw a line and prove out any narrative for yourself. But this is kind of has this double bottom within the consolidation. But it gapped up here, traded sideways, pulled back to its 50 here at 144, and then it's just ramped higher, and it's extended from, I would say it's extended from its base right here. But you can see the consolidation pattern. You got a 3 weeks tight area in here. Now it's just pushing away from its base, and this is one that I like. but it's getting away from us. Anyway, that was a long watch list. Enjoy your 3-day weekend. We will be back on Tuesday with a new watch and ready list, and we never give up.